Hi, I'm Douglas Mason, President and CEO of Rainy Mountain Royalty Corp., RMO, on the TSX Venture Exchange. Rainy Mountain Royalty Corp. is a Canadian-based mineral exploration project generator. The company currently holds multiple property interests in Ontario with joint venture partners and is seeking further joint venture partners for other drill-ready properties in our portfolio. For more information, please visit our website at rmroyalty.com or call me at 604-922-2030.
You're listening to HowStreet.com radio, available online at TalkDigitalNetwork.com. Welcome to HowStreet.com radio, the online source for market opinions. Here is Jim Goddard.
My guest is Steve Saretsky. He's a Vancouver-based realtor, online at SteveSaretsky.com. Welcome back to the show, Steve.
Always a pleasure. Thanks for having me on.
Steve, what's happening in residential construction, starting with condos?
The condo sector is still quite busy. At least, here in Vancouver, we have a record number of units under construction. So basically what we're seeing is the developers are basically wrapping up, their construction. They're trying to get projects completed. In terms of the presale centers, you're seeing developers, really starting to offer more incentives and bonuses to try to, they have to hit a certain requirement in order to get construction financing. Usually it's about 60 to 65% of the building. So they want to get that pre-sold so they can basically, get their financing and hit the ground running, because I think they see sort of the writing on the wall. That's kind of what's happening in the condo construction segment. And then it's obviously a much different story in the single family segment.
What's happening there?
So what we're seeing is basically, you had a lot of people that sort of jumped into single family construction over the last couple of years. And what happened was in 2015, 2016, we had crazy amounts of, foreign capital coming into the market with outflows out of China. It was, record number of housing sales, land prices were shooting up. So everyone basically started building, tearing down old homes, building these luxury $3-4 million homes, and then, trying to resell them to sort of that, Asian market. But what's happened now is that a lot of that money is not only pulled out of the market, but now you're also left with sort of an oversupply of luxury homes that realistically very few people can afford locally, $3-4 million homes. So, that luxury segment, it's been hit really hard, and a lot of single family builders some of them are actually pulling out mid-construction because they know it's basically a losing proposition to continue to build. And so we're seeing single-family home starts have dropped off quite a bit.
Is there any way to turn those into a different kind of project?
Single-family, not really. It's tough, too, to take over because you don't really know the quality of the build. Sometimes what happens is these guys get mid-construction and then, they kind of just leave it there for a bit, and then, you have the weather, the rain starting to hit, exposed, plywood, et cetera, and that can start to deteriorate the building. So, for someone to basically come over and take over a single family project, it actually can be, you have to do a lot of due diligence, and so there's not generally a whole lot of appetite to take those over.
We'll have more with Steve Saretsky right after this.
Avon Resources Limited is a gold exploration company with significant projects in British Columbia, Saskatchewan, and the Yukon. Trading on the TSX Venture Exchange, symbol ABN, and the pink symbol ABN-AF. Surrounded by world-class gold deposits and mines, Avon's 23,000 hectares Forest Kerr Gold Project is located in the heart of the Golden Triangle in northwestern BC. For more information, visit us at avonresources.com.
Grand Portage Resources recently completed the 2018 drill program on its 100% controlled Herbert Gold Discovery property located in the prolific Juneau Belt in southeast Alaska. Drill results are expected through late 2018. Past drill results included numerous multi-ounce gold assays on multiple veins. Grand Portage trading symbols are GPG on the TSX Venture, GPTRF on the OTC QB, and GPB on Frankfurt. For more information, please visit our website, grandportage.com.
Welcome back. We're speaking with Steve Saretsky. Steve, when housing construction slows, are other industries affected?
Yeah, it's kind of, they generally go like hand in hand. There's a lot of, people employed in the construction sector. I think, in BC, I think it's just under 10% of the workforce is employed in the construction sector. So generally when that starts to slow down, capital starts to dry up, or credit starts to dry up, and that ultimately weighs on, the rest of the economy, because real estate and construction is such a big component of our GDP. In BC, I think, construction in the finance sector, along with real estate, makes up about 24-25% of GDP. So as soon as that starts to slow down, you have sort of ripple effects. You'll start to see retail spending really start to slow. And we've already seen that, across Canada here, as retail spending is slowing. Construction, housing starts are slowing. And, that just basically means when there's fewer, home sales, it will impact the retail segment. So one of the segments that's getting hit hard right now, I believe Stats Canada showed, for November, that retail, spending at furniture stores dropped, I think, 3.5% from last year. So, it does have sort of a ripple effect.
If the constriction of credit and the banks becoming unwilling to lend causing this downturn? Yeah,
it generally goes hand in hand. Is what we see in the upturn is prices are rising. The employment gets better. People get more jobs. You have a booming construction sector. So credit is flowing because prices are rising. The banks a lot of them basically act similar to an investor, right? If prices are going up, everybody feels good, so they're more content to lend you money. But what happens in the reverse is the prices are dropping, the banks get a little bit tighter, and ultimately when you actually need, credit to flow to help reverse the slowdown, what happens is the banks actually get tighter at the wrong time, and so that generally exacerbates liquidity issues as well as credit contracting.
Are we likely to see a recession soon?
That's a tough one. I think that we're certainly seeing a lot of segments slow, and again, real estate nationally having home sales for all of 2018 coming in at a 6-year low, because it makes up such a large component of our GDP. That's going to weigh on the economy significantly, much more than, mainstream economists want to talk about. If you look at Canada, I think like the consumer spending component of GDP makes up roughly 65%, give or take, of GDP. So as soon as the consumer starts to slow down their spending, that has massive ripple effects across the economy, and that no doubt, that's why we're seeing our GDP slow. The Bank of Canada's reduced their forecast estimates for growth in 2019. They're still way too optimistic, in my opinion, and I think that's why rate hikes are on hold for now, because it's having a much more significant impact on the broader economy than people want to talk about.
Are developers still bullish on the Vancouver housing market?
I think it kind of depends on who you talk to. I've certainly talked to some of them, and some of them are a little bit more cautious, a little bit more pessimistic, but I also, talk to others that are still extremely bullish. I think that, in my opinion, what happened here in 2008 and 2009 is we basically avoided the financial crisis. We really had about a 9-month, 10-month housing correction. It was very short-lived, and I think that created almost like a false safety net in terms of developers are looking at it and saying, or they've been looking at it and saying, well, the whole world was crumbling, and Vancouver only went through a 9-month housing correction, and so, that's pretty much like as bad as it can get. But I think that we're definitely in a much different territory today than we are in 2008, and you can see that not only through, mortgage credit growth at a 35-year low. You're seeing the money supply growth, the true money supply growth, is shrinking dramatically as well, and that ultimately exposes, the bad debt, bad credit in the system. So it's a much different component. I think that developers would be wise to take a more cautious approach.
We'll have more with Steve Saretsky right after this.
Hi, I'm Douglas Mason, President and CEO of Magnum Gold Corp, MGI and the TSX Venture Exchange. A 2015 drill program on the LH property intersected several high-grade gold intersections, including 11 meters of 20.66 grams per ton gold. Additional drill targets on the LH property have been identified by a 2018 drone airborne magnetic survey to further evaluate a pyrrhotite-enriched gold-bearing system. Please visit our website at magnumgoldcorp.com.
Don't miss out. Stay informed. Receive the HowStreet.com weekly recap with thought-provoking podcasts, radio, and articles delivered to your inbox. Sign up for the HowStreet.com weekly recap on our homepage at HowStreet.com.
Welcome back. We're chatting with Steve Saretsky. Steve, when housing markets collapse, do some developers go under?
Yeah, we saw it. Again, as I talked about, we only had a 9-month correction in Vancouver, but even then we still saw some developers struggle. Some went bankrupt. You saw big developers like Ani that are well capitalized. They had like liquidation sales on certain projects. They're ultimately fine, but they had to liquidate some excess inventory that they had. And again, that was only a 9-month correction. So if we start to go through something more prolonged, it basically just exposes a lot of the malinvestment. And I think that what you're going to see here is a lot of the good developers, that are well capitalized, that have been through a couple cycles, they're going to be just fine. I think it's a lot of the smaller guys, mid-sized guys that, have a tougher time getting financing. They have less experience. I think they're going to go through a much more difficult time. And I think they're much more prone to bankruptcy and foreclosures and whatnot.
Can buyers expect some good sales right now?
We're starting to see it. It kind of depends, what you're looking for, and obviously, up to the individual in terms of what is good value or a good deal. Certainly, if you look at luxury homes, pretty much throughout Greater Vancouver, those can be had at, on the west side of Vancouver, you could be looking at a 30% discount. So I think that's a substantial discount. One could certainly argue that would be a bargain, at least from peak prices. Condo-wise, I don't know if you're seeing that yet. You have maybe about a 10% drop in that market. Developers on the pre-sale side are starting to ramp up incentives. And, in terms of you're seeing a lot of people that have assignments that were basically pre-sale condo purchases that they're looking to flip and get out of. And a lot of them are selling at, a break even or a loss, just because they're trying to get out for whatever reason. That could be, they were speculating and never intended to close, or it could be financing issues, etc. But I think you'll see a lot more of that because we do have a record number of housing under construction in Greater Vancouver. And ultimately, all these people that bought these pre-sales are going to have to close. And whether that's closing in 12 months or 24 months, they're going to have to close. And so it's really going to depend on market conditions.
What is happening in the pre-sale market?
Basically, record number of units under construction. Housing starts are starting to slow down, but they're still at very elevated levels. I think, like I said, developers trying to rush, get their pre-construction targets so they can get construction financing. They want to hit the ground running, because they don't want to be, as a cycle turns, you don't want to be sitting on a bare piece of land for, 3, 4, 5 years until the cycle comes back. They're trying to ramp up their pre-sales, a lot of the times doing that through, incentives such as decorating bonuses, discounts, realtor bonuses, etc., just to try to get people into the sales centers and writing on contracts.
Was it a coincidence that the Vancouver housing market peaked in the spring of 2016 when China started imposing restrictions on currency leaving the country?
I don't think it's a coincidence. I think that it's a pretty good remark. There's no doubt that I think the Chinese capital outflows in 2015, 2016, helped ignite global property markets, and as the International Monetary Fund has done several reports that a lot of these global city property markets do move in tandem, just because of how financialized our market economies have become. We're now starting to see not only Vancouver, really started to sort of top, at least in the detached luxury market, started to top out early 2016. But, so did many other property markets, whether that was Sydney, Australia, a lot of the luxury property markets, Hong Kong, et cetera, all started to slow sort of around the same time. And, so I think that's, what's happening in China definitely matters, here in Vancouver.
China's economy is in trouble. Relations between China and Canada seem to be deteriorating. Is this likely to affect the Vancouver housing market?
I think it'll be something to watch for. As I talked about, many people building luxury homes, for that specific clientele. And obviously, if it's harder to get your money out, relationships start to sour. You could certainly argue that, despite GDP in China growing at, 6% or 6.2%, for China's, economy, that's a really poor performance at 6.2%. I think it was for 2018 is one of the lowest GDP prints they've had in 2 decades. So, if those conditions start to deteriorate, that definitely impacts, what's happening here in Vancouver specifically for more of the luxury properties. I think they've been very active as well in the presale construction space. So that's going to matter too in terms of like how many of them cross the finish line in terms of closing on these contract obligations the next, 12 to 24 months.
Japan has had low interest rates and a stagnant real estate market for decades. Could that happen here if Canada's rates stay low?
I think it's unlikely. I think that one of the differences between, Japan is they have like a no immigration policy. I think it just started to reverse that. Whereas Canada and Vancouver, it's very immigrant focused, increase in population. So it's different in that aspect. But I do think that you look at it from a global economy perspective, I think central banks are going in the direction of Japan where you lower interest rates basically to the zero bound and you kind of get stuck there. So, the U.S. Federal Reserve just came out and they're pausing rates basically at 2% here. The Bank of Canada looks like they are probably done. They won't get the 2%. So we really don't have much ammo for the next recession, which is probably around the corner. So, what's the Bank of Canada going to do? They're going to cut rates from 1.75, drop them down to 0. It really doesn't give you much flexibility. And then in terms of same thing with the Federal Reserve, right? Japan's been continuously printing money and they can't seem to get off that drug. And I think, the Federal Reserve is now talking about stopping quantitative tightening. I just think that once you get on that QE zero interest rate policy, it's very hard to get off of. And, you do certainly worry that potentially we are going down and becoming more Japanese.
Are building cranes likely to end up on the endangered species list?
You're definitely going to see as the cycle, turns and rolls over as it is now, nationally home housing starts, have started to decline. Toronto is home to the most cranes in North America. I think they have just under 100 cranes active right now. And, Toronto just came out, last week, the report from, I believe it was Urban Nation, basically saying that, Toronto new home sales were at a 20-year low for 2018. It was an 18-year low, the lowest since they started recording the stats in 2000. So, despite, record, you could say population growth and a relatively strong economy there, the appetite for pre-sales has diminished significantly. So there's no question that, a lot of these developers with plans of building aren't going to be able to get off the ground simply because they can't hit pre-construction sales targets.
Steve, thank you so much for being on the show.
My pleasure. Thanks for having me on.
My guest has been Steve Saretsky, a Vancouver-based realtor, online at stevesaretsky.com. You're listening to HowStreet.com radio. Our popular YouTube channel is Talk Digital Network. Find us on Twitter at HowStreet. Any questions for the show or our guests can be sent to info@HowStreet.com. I'm Jim Goddard. Thanks for listening.
Comments made on HowStreet.com radio are an expression of opinion only and should not be construed in any matter whatsoever as recommendations to buy or sell any financial instrument at any time. Available online at TalkDigitalNetwork.com. HowStreet.com radio is a production of HowStreet Media Incorporated.